Welcome everyone to another edition of the Industry and Transition Zoom call. I'm Tony Sirianni, and I'm very happy to have Matt Chisholm. And I was calling you Scott before because I had a college buddy named Scott Chisholm. I don't know if you're related to him. We didn't discuss that already.
No, I don't believe so.
No, there can't be that many Chisholms. SVP of Practice Management and RIA Services, right? For
Yes.
Commonwealth. So I'm very happy to have you today because I think somebody in your position, speaks to advisors all the time. I mean, that's part of the gig, right? I mean, you got to be there for them and try to figure out solutions. And I'm sure our audience be interested in what sort of solutions and what are you hearing about all the sort of issues that advisors are facing. I mean, there's plenty going on. So kind of want to start with the basic one. We're sort of post-pandemic, we're not post-pandemic. We've got sort of this ongoing, deal with COVID and now the Delta variant. And what are you hearing and what is the firm doing and where do you see sort of the short-term solutions, for this thing?
Yeah, it's tough. It's hard to imagine that we're back into the situation that we're in now, having, thought that we were far enough clear to start to really engage. The biggest downside of all this has been our inability to physically engage with advisors. And we 2 weeks ago had our first leaders advisor event since March of 2020. Wow. And it was almost not in that we were able to mobilize the entire facility and all the meetings and all the meals and everything outdoors. And we lulled ourselves into a sense of security that, oh yeah, this was great. And it takes a rare venue and a rare opportunity to pull something like that off right now. And so we had a calendar of events that we have to really assess different state policies, different masking policies, different spiking. And it seems like it's an ongoing battle to do everything we can to try to get back engaging with our advisors as soon as possible. And having coming off, yeah.
The advisors are having a similar issue with their clients. I mean, these are people who love to be in front of that's how they got the clients in the first place, is by being in front of them. So they're struggling. What are you hearing from them about what's going on in the field?
I think that they all adapted well to virtual engagement. And I think that didn't, really cause too much of a bump for anybody where they were previous. But yeah, many of them, particularly as you referenced, the ones that are very engaged and have a high EQ element to how they engage with their clients, and that emotional piece of it is really starting to drive frustration because there are limits to the virtual, and particularly at the further out on the spectrum of the demographics. A lot of those folks, even though they're capable of doing it remotely, as you say, they want to engage, they want to kind of get back to it. So still wait and see. It really is it seems to be week to week. We have such a diverse footprint across the country that we have folks that have been back in the office meeting with their clients face to face for months now. And we have others who still, are not back to the office. We here in the home office of Commonwealth had originally intended to be back in this week. This was up until a month ago. This was when we had originally intended to come back, and that because of the variant has now been pushed out to November. So it's unfortunately business as usual, but it still pushes out what we are missing the most in this environment, is that real tactical touch of advisor engagement.
I mean, there are certain things. I mean, the Delta variant doesn't care about our problems, and neither does the economy, right? So we're entering sort of an interesting phase. We have inflation potentially. There's just the job thing is a weird mix of people not working and jobs being available. It's just we're not used to that. What are you guys doing from a practice management standpoint to sort of talk about the economy with advisors?
So, a lot of what the labor, the jobs is really, I think that the number one thing that we agree with, it's really hard to figure out. We're seeing higher turnover ourselves in areas in the field and in home office. We have a lot of open recs that we're really challenged to fill. We put a big bet on diversity and inclusion and have even widened our reach to find candidates and pools in that spirit. And yet still, the numbers just don't seem to add up. Part of the hope is that a lot of the subsidies and the COVID relief that folks have been, relying on is starting to dry out. And so hopefully that does kind of bring some folks back into the workplace. We also are seeing a lot of returners. or second careers, adjacent careers now because of the flexibility, and having the commensurate underlying skill sets. That's another area where we're trying to exhaust to start to fill in some of that wage discrepancy and employment gap that we're struggling with.
And in terms of advisors dealing with clients and maybe some resources that you have, for them from a practice management standpoint, taxes is an issue that no one knows what's going to happen. It affects almost all of our clients, particularly if there's a cap gains tax or a stepped up cost basis, stuff like that. What are y'all doing to sort of help your advisors manage it? Because it's an unknown, but it's scary and something's coming. We know they're really pushing for it. So what are you hearing about that?
Yeah, I think the number one thing that we're seeing from our advisors, and it's the different sides of the same coin. It's a succession or it's an exit. And to the point, a lot of them are being driven because of the pending tax changes. And, is now the time, markets are high. If I wait too long, am I going to miss on my big capital gains opportunity? So to that end, what we have done is we've done two things. We've really started to institutionalize our support of advisors looking for successors or buyers. And we've also brought a lot more liquidity flexibility to bear to kind of help either fund the buyout or accelerate the exit because of the need and the want to avoid or the potential change in some of the tax legislation. The idea is, everything from loans to cash flow purchases and other frigables. It's really to create a suite of flexibility. So not only can we help quantify the how and the what it's worth, but then how do we actually play our role in capitalizing it? And since we're still independent as far as our advisors are concerned, and we're not taking equity ownership or any kind of W-2 type of advisor model, this is all built out in the spirit of continuing to let them be independent and giving them as much flexibility to capitalize whichever side of that equation you're on the way out or on the way up.
Yeah, well, obviously that's tremendously important. We have an aging workforce, in this business, and we have too few young people, coming into it. So there's really a lot of opportunity. I see the opportunity for a young advisor, someone who's been trained and maybe, at a wirehouse and not done well in a training program there. Is there an opportunity at Commonwealth for them to come in and sort of, you guys hook them up with a senior advisor who's already thinking about retirement or succession?
Absolutely. And certainly we would default first within the Commonwealth network community itself.
Yeah, you're right. You want to keep it in the family if you can.
And it's such a high quality community that it really behooves us all to do our best to try to kind of keep that going. And the strong sense of community also builds that. But yeah, I think that part of what we are finding an opportunity for, there's many of the founders that did not find themselves as a successor. And so that's to your point, the demographics, that's become a challenge. And where I think they've had to consider different outcomes or exits that they had originally envisioned, because they really care about their clients. They don't want to just sell out, but they can't get comfortable with who that next gen is. So that's where we're stepping in to try to help matchmake and capitalize those transactions so that we don't have to, lose the relationships, but more importantly, that the advisors don't really have to depart from, where they want their longevity for the relationships they've built to persist.
And those are custom plans. There's not like a one size fits all. I'm just assuming based on what you said.
Without question. And again, back to being flexible means that there's a lot of variation in outcomes and in plans. So, but that is, I think, a lot of what we focus on is that kind of more service oriented, higher touch. And so therefore, inevitably, you lead to more custom solutions than you would through a standard approach.
Also, I guess the third big, there's probably 4 or 5, 6, looming threats or worries that advisors have. Regulation is another one. So, if you're a solo RIA advisor and you don't have the scale and everything else, it's a little bit scary to sort of think about what's going on regulation wise. Not because you might be doing something wrong, just because you want to comply. you want to make sure that what you're doing is right. And then also that's a little bit fluid too. They're talking about certain things and you don't know where the regulation is going to end up. So what are you hearing about that?
I think a couple of things. We've been constantly focused on kind of lowest cost share platforms and really getting that side of the fiduciary kind of squared away. On the regulatory, DOL is a big kind of, there's real action. It seems like that's coming back around. So we just have started to educate folks on what they're going to need to expect as it relates to that. And then on the RIA side, one of the areas that, in recognition of your point, we have an outsourced chief compliance officer for exactly what you're talking about, a small RIA that really doesn't have the breadth or capacity to get their hands and head wrapped around all the compliance issues. So we don't file for them, but we will go and kind of bring them all the way up to the line. And so that's where I think that we can supplement their resources and give them that expertise, because there's no way that a lot of these smaller RIAs put the compliance, the technology, and everything else. We really focus on being time merchants for our clients. Yeah. And so outsourcing services, whether it be virtual assistants, paraplanning is a new service that we're rolling out, business intelligence, business analysts, all of these are kind of a suite of capabilities that we continue to look to add to in order to give back more time to advisors and to take off things that we see at scale, like compliance, that isn't really in their best interest vis-a-vis being a time merchant and spending time with their clients.
So we have all that, the taxes, inflation, jobs, all that stuff is sort of looming, but we got regular, client-facing issues like estate planning and the more sophisticated elements of an advisor practice. In terms of that, from practice management point, from where you're sitting, what are you providing there? And look, some of that stuff touches directly on things like taxes, like the estate planning. You got to kind of get your arms around what's what. What are you seeing there?
We're really, again, have always been ahead of a heavy focus on financial planning. And I think we continue to try to mature that and have that become the focal point for all the complexities that you're talking about. So we do have an advanced planning team. We are looking to do a lot more in the ESG space, which, again, charitable giving, a lot of these, start to be these more complex issues that have tax opportunities and or implications. Some of the other areas that, we think that the insurance product and how does that play into the portfolio as it relates to some of the risk management side of this is again, a big area, but it's all really just leading with planning in simple terms, and then how do we kind of
is that how you deliver that, is through like a planning solution that they get online and then they have somebody they can call, or
exactly
is that how it works?
Yeah, and it works at both ends. So we always traditionally had, we've got estate planning and lawyers and so forth on staff that help with really high-end complex cases. We have a relationship with Right Capital, the financial planning software. And then, as I referenced, we're now launching a virtual paraplanner. So you essentially can get kind of someone to create and do the legwork on the creation of the plan. The advisor delivers it. And then we also have this kind of SME capability to go up market to do the tax and the estate planning and some of those other things.
Yeah. We have in sort of going through what else advisors need in there's also team issues, right? So as advisors grow, they want to sort of build teams, they want to or manage what they have. Is there from your point of view a practice management element in that?
Without question. Yeah. I think we, and part of what we've been working on in modernizing and institutionalizing our more traditional practice management that was built on the needs of solo advisors, building up books of business. Then we got into ensembles that have very degree of integration. Back to the topic of the day, succession and acquisition. That's really where we're at the third leg, where it can't just be an ensemble to take expense out of the system. It's got to have an integrated value proposition. And so the point of teaming, we have a number of, to your point earlier, younger advisors, many of who are second generation and recognize now they have a big, healthy book of business and a lot of runway ahead of them. Those, and there's probably a half a dozen that are building businesses now on providing either the destination to the founders who no longer, as the successor to it, or bring on service advisors just to continue to grow and scale. And so I think both of those elements of teaming are the way the younger generation that are trying to grow, the G2 business, given that they've got hundreds of millions in assets already, they're not hunting as much, they're growing.
Yeah, they're growing, and they're trying to get that intergenerational wealth transfer too, which is
Yes.
sometimes harder for an older generation to make happen.
Yeah, when we sit down and do some valuation work with some of our clients, and you start at the account level or the client level, it's a very different when you look at the household level. And so the recognition of having children and grandchildren as part of the overall portfolio is exactly what those younger advisors are trying to dig into. And so I think there's a huge opportunity, and we do see business models emerging just within our network alone to try to address this opportunity for the next gen type of advisor.
Yeah, the next gen stuff is there are some, and I don't know if this just doesn't happen with every generation, but they've got crypto, they've got, this social media investing like GameStop and stuff like that. And then you've got, the SEC now is working on these sort of applications on your phone that look like a game. When you're investing, it looks like a casino, So I think there's an element of education that needs to be had for younger clients, the kids of our clients.
Without question. I mean, we had to read what the application said to understand what it is we were getting ourselves into. Now everything is so simple and on a phone and fast. The consequences and the complexities and the disclosures and whatever else is the real impact of some of that stuff. It's not going to get more light shine on it. It's just going to get easier and faster, and therefore I think riskier for the wrong type of investor.
Well, I talked to dozens of CEOs, right, over the course of a year, and leading some of the biggest companies in our business. And it seems to me that when we're in challenging times, the one thing that doesn't change is advice. We just have to make sure we educate people on the value of advice. That seems to be what we have to do with this next generation. There is actually a value to having someone who's been there, done that, and see through it. And I think when we have all these challenges, and again, in regards to succession or whatever it might be, that advice still remains, the key function.
Without question. And I think COVID and some of what we've been through the last year continues to prove that out. And many of our advisors are continuing to grow through referrals when times are the toughest. And so I think that there certainly is still a bull market for advice. And I think that a lot of what 2 years ago was a frenzy around free trading, and as you talk about newfangled apps and the whole world was going to be digitized, I don't see a lot of that as much as we did a year and a half and 2 years ago. So even though we fully mobilized in a digital engagement model, I still think that the reason that we're talking this way is because that human element to this business is what makes it unique and gives it sustainability.
Yeah, in my mind, that's a challenge for anybody who's running practice management anywhere, right? Is we've got to adapt all these technological advances. We have to, right? We have to have scale, because that's what advisors on their own don't have. But we've got to integrate advice to the point where it's still the primary focus of everything that we do, the individual advisor, right? And it's a challenge.
Yeah, and that's why I think the planning framework, to a large degree, continues to kind of account for all the flexibility and all the complexity of an end customer's needs. Now, you talked about there's the values, the value of advice, and to the next gen have to understand that. But the older generations also have to understand their values are different than what we grounded our value. So I just think that it's a natural alignment that has to happen. But technology has, created an opportunity at the lower end of that spectrum to do some education that probably is better suited by somebody who's actually sat in the seat and can actually talk somebody through it. You don't go to school for and be taught by an app. You go to school to be taught by a person, and I think there's
plenty of good. I'm optimistic about the future. There's plenty of good of people being involved in the markets. You know what I mean? I like this half share stuff that people can do. The more people we can get invested in society, I think the better off we're going to, and understand capitalism a little bit, the better off we're going to be in the long run.
I think that's why ESG is done as well as it's done, because I think that's a toehold that has kind of bridged kind of the traditional value system, and people are voting with their dollars and their feet, and the numbers are showing that. So,
and now it's being regulated too. So people have to prove what they're actually doing. Well, look, we've been like 20 something minutes here. I want to, if there's anything that I didn't ask you that you wanted to talk about, I'm happy to do that now.
I could talk a bit about our only business.
Else that we might have missed.
Yeah, I think, well, so back to succession and so forth, we at Commonwealth, one of the things that we have done is in the last 2 years, we brought in externally 6 new SVPs, of which I am one. And so what that really doing is, 40 years ago, right, Joe founded Commonwealth, and that continues to live on, and the partnership, is as strong as ever. But it's also a recognition of the need to develop sustainability and succession within the home office as well within our advisor base. So that's a big area where we have invested, and now the fruits of that as we're coming out of COVID to have some new eyes, some new talent, some new energy start to really get on the front lines again because we're coming out of our COVID shells.
Right.
We're really kind of excited in across the board for the amount of energy and investment that we've built up that we expect to start to pay dividends. Hopefully, before the end of this year, but probably 2022 is the year we're really gonna bust all this out.
Well, look, it's great talking with you. Commonwealth's a great firm, and love what you guys are doing. And you guys have a ton of good material for advisors to look at that I think is, pretty unbiased for, a firm putting it out about, if you're thinking of going independent, check it out. So I think it's worth advisors, the stuff that you put on our site. It's good stuff. So appreciate you being here.
Well, fabulous. Thank you for having me. This was a pleasure. And, again, have a good day, and looking forward to talking to you the next time.
We'll do it again. Thanks a lot.
Take care.